R&D Tax Relief, 5 Common Misconceptions, recorded in July 2013. Hi, my name's Steve Livingston. I'm a chartered accountant and founder of a niche tax and accountancy practice, IP Tax Solutions. I also write and share ideas and tips for ambitious entrepreneurs at businessn2k.com. I could probably give you about 25 misconceptions that I hear on a regular basis regarding the UK's enhanced R&D tax relief, but I thought today I'd just share with you the 5 most common. So kicking off from number 1, I can only claim R&D tax credits or cash back if I've paid tax in my company, so corporation tax or pay-as-you-earn or NIC. This is wrong. HM Revenue and Customs will help you supplement your development costs by paying your company a tax credit equivalent to roughly 25% of your qualifying R&D spend. Now this assumes you're loss making, so you're pre-revenue and you're going through your development phase, so your development work, you're incurring these costs. And as you can see, to be able to get a quarter of it back from HM Revenue and Customs is hugely valuable, and it usually comes back within about 30 days of making a claim. Number 2, I need to have paid pay-as-you-earn or NIC to be able to claim an R&D tax credit payment. This is wrong. You used to be restricted in the amount of R&D tax credit you received if you had not paid an amount equivalent or more in pay-as-you-earn or NIC, so it was true. But the misconception now is that it still applies. It doesn't. This requirement was dropped for accounting periods ending on or after 1st of April 2012. This means that companies that subcontract much of their development work and were therefore penalised in the old rules should now take a second look. They may wrongly be under the impression that this relief isn't for them, whereas the rules have now changed, so please make sure that you take a look at this. Number 3, I'd never previously known about the R&D tax relief. I never thought it would apply to a company like mine, but we've completed our development work last year, so we must have missed the boat. Wrong. You can apply R&D tax relief retrospectively by amending the tax returns for the previous 2 accounting periods. So you have a 2-year time limit effectively where you can go back retrospectively to amend those returns that ended in the previous 2 years. So all is not lost. We can go back and make amendments. Number 4, my company is too large to be eligible to make a claim under the preferable SME R&D tax relief regime. Now to clarify here, there's a large company scheme and an SME scheme. The large company scheme, although it's improved over the past year or so, is still not as beneficial as the SME R&D tax relief regime. But again, this is wrong for most companies. The SME definition for UK R&D tax purposes is huge. So what is it? Well, you've got to have less than 500 employees, plus either turnover less than 100 million euros or a balance sheet total less than 86 million euros. Now I'd imagine this probably covers about 90% plus of UK companies, so you may well be eligible for this SME relief, even though you are a fairly sizable company compared to many. And number 5, the most famous of all, we don't have an R&D unit with specialists in white coats, so it's unlikely to be relevant to a company like us. Probably wrong again. R&D tax relief requires an advancement in science or technology. Now it's the technology part which is pretty wide, and it can cover pretty much all industry sectors, from architects to zoos. Well, maybe not zoos, I couldn't think of a Z. Zoos don't usually pay tax, and they'd also have to think of something particularly innovative, but you get the gist, and I've made a suggestion there, so moving on swiftly. Please visit us at businessn2k.com and sign up for our email list to receive more ideas and tips for making or saving money for your business. My name's Steve Livingston. I hope you found that useful. Just 5 common misconceptions in relation to the R&D tax regime. Thanks for watching.